Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. In my previous videos of royalty, I have explained the concept of royalty, and in another video, I have explained how to prepare the analytical table. Because to pass any journal entries or prepare ledger accounts, you need to prepare first an analytical table. So it is the first step in the royalty account. If you are not watched that video, kindly watch that video for your understanding. Let us solve today the preparation of analytical table and also the journal entries, passing the journal entries. Z Company Limited took a lease from a landlord for a period of 25 years from 1st January 2019 on a royalty of rupees 2 per ton of coal raised with a minimum rent of rupees 20,000 and power to recoup short workings during the first 4 years of the lease. The annual output was as follows. The output is 19 5,000 tons, 20 8,000, 21 10,000, 22 15,000, 23 20,000. You are required to pass journal entries in the books of the Z Company Limited. So here, leaser and leasee, two are there. Who is leasee here? Z Company took a lease from the landlord, Z Company, and it took it from 25 years. Output is given for the 5 years, and the royalty is rupees 2 per ton. 2 per ton, and minimum rent is given 20,000. In some questions, the minimum rent changes. In case of strike or in case of lockdown, there will be a changes in the minimum rent. Otherwise, this remains the same. Minimum rent means it is a fixed rent or a dead rent. The every year amount remains the same. That is minimum rent. Let us prepare the analytical table. The analytical table is here 2019, 2020, 21, 22, 23. Output is given in tons. That is 5,000, 8,000, 10,000, 15,000, 20,000. Now royalty. How you are calculating royalty? You are multiplying the output with the royalty. 5,000 into 2, 10,000. 8,000 into 2, 16,000. 10,000 into 2, 20,000. 15 into 2, 30,000. 20 into 2, 40,000. How we got royalty? We are multiplied output with the royalty per ton. Per ton is given, that we are multiplying with the output. Now minimum rent. Minimum rent is given in the question. It is 20,000. It remains same for all the year, right? So 20,000, 20, 20, 20, 20. All the year you are writing same. That is minimum rent. Now surplus. Surplus is when royalty is more than the minimum rent, it is called surplus. Do you have any surplus in the first year? No. Second year? No. Third year it is same, so no. Fourth year we have 10,000. Fifth year we have 20,000. Royalty minus minimum rent is surplus. Then short workings. Short working is minimum rent minus royalty. The minimum rent should be more and the royalty. Minimum rent is more than the royalty is called as the short working. First year short working you have 10,000. Second year short working you have 4,000. Third year there is no short working. So fourth year and fifth year we have surplus. So no, there is no short working. Now recovered. What the question says, you can recover in the first 4 years. Only in the first 4 years. 3 years you can't recover because you have the short working and it is equal, and only in the fourth year you have surplus. So you can recover. How much you can recover? 10,000 you can recover. How much you are supposed to recover? 14,000. How much you recovered? 10,000. What is the balance? 4,000 is irrecovered. Is it clear? 10 plus 4, 14,000. 14,000 minus 10,000, 4,000 is irrecovered. Understood? Because the first step is preparation of the analytical table. If this goes wrong, your entries will automatically go wrong. So that is why you need to be very careful, and it is very easy also. Now landlord, here you are comparing which is the year, the minimum rent that you are paying to the landlord. Second year also you are paying to the minimum rent only to the landlord. Third year it is same, no change. In the fourth year, you have 30,000. But you can't give 30,000 because you have recovered 10,000 from it. So 30,000 minus 10,000, what is the remaining balance? 20,000 you are writing here. Then in the fifth year, 40,000 whole amount you are paying to the landlord. Analytical table understood? Minimum rent is higher, so first year you have paid minimum rent, second year also you have paid minimum rent, third year it is same, so royalty only you have paid, and in the fourth year 30,000 royalty is more than the minimum rent, but you have recovered 10,000 out of it, so remaining balance is 20,000 that you have paid to the landlord. And in the fifth year you have paid same royalty amount to the landlord. Is it clear? Yes. Let us pass the journal entries in the books of Z company you are preparing. Now, royalty is a nominal account. What is the rule of nominal account? The nominal account rule is debit expenses and losses, credit incomes and gains. That is the rule. The first entry you are passing is due entry for the year 2019. Due entry you are passing. What is the rule of nominal account? Debit expenses. So what is your expense? Royalty is your expense. For the Z company, royalty is a expense. So royalty account you are debiting. With royalty, you have any short workings? Yes, because you have paid 20,000 to the landlord. How much short working you have? 10,000 short working you have. 10,000 is short working is a nominal account. So it is also an expense to you. So short working account you are debiting. Short working account you are debiting. To landlord. To landlord. Landlord is a personal account. For the due entry, you are crediting the landlord. Okay. Now, what is the amount? Royalty amount is 10,000. Short working amount is 10,000. And landlord, you have paid how much? 20,000. Your debit is equal to credit. Is it clear? Yes. What is the narration? Being first year royalty due. First year royalty due. Then second entry is the payment entry. For the same year you are making payment. Now whom you are making payment? to the landlord. So he is the receiver. Landlord is a personal account. What is the rule of personal account? Debit the receiver, credit the giver. Debiting the receiver. Who is receiver? Landlord account. Landlord account. Debtor 20,000 and you are making payment through bank. Bank account you are crediting. Bank account you are crediting. Being first year royalty paid. First year royalty paid. Now the third entry is for the transfer. Now you need to close the royalty account for the first year. So for that you are transferring royalty to production account. Production account is also a nominal account. So production account you are debiting, you are crediting the royalty account. And what is there in your royalty account? 10,000. Only this amount you are recording while transferring. 10,000. 10,000. Being royalty transferred. Royalty transferred. Now, let us pass the entries for the second year. So, what is the first entry? First entry always for the due entry. Due entry you are recording. See, practice with me. This is one of the easiest chapter. Don't bad. Be clear with the concept. And if you want any question paper questions, particularly any year, if you want specifically on me to solve, then in the comment section give the questions so I can solve those questions also for you people. Okay, but conceptually you should be clear, then you can attend any questions. So only I am first solving the concepts, then I am coming to the problems. So concept be clarified with the concepts. 2020. 2020, what is the first entry? Due entry. So royalty account is, it is a nominal account. What is the rule of nominal account? Debit expenses and losses, credit incomes and gains. So if you understand like this and if you solve, you will never make mistake while solving the problems. So royalty account debtor, and we have short working account debtor. What is the amount? Royalty account it is 16,000. Short working account 4,000 and in landlord 20,000. 16,000, 4,000 to landlord account 20,000. Being second year royalty due. Second year royalty due. Then second entry is for the payment entry. To whom we are making payment? Landlord. Here we have credited landlord. Now we are debiting landlord to make payment. Right? Landlord account debtor. The rule of personal account. Debit the receiver. Landlord account debited and bank account. What a bank account is? A real account. What is the rule of real account? Debit what comes in, credit what goes out. cash is going out. So bank account you have credited. And what is the amount? 20,000. Being being second year royalty paid. Then what is the third entry? Third entry is for the transfer. Transfer of production. Royalty you are transferring to which account? Production account. Production account data to royalty account. What is the amount there in the royalty? It is 16,000. 16,000 being royalty transferred. Transferred. Yes. Now, third year. In the third year, if you see, there is no surplus and there is no short working. There is no short working. So, only entry you are passing royalty account data to landlord account. Then you are making payment to landlord by debiting the landlord account data to bank account. For the year 2021, first entry is royalty account. Why we are debiting royalty account? Royalty is a nominal account. It's an expense to the Z company. He is a tenant. Z company is a tenant. He took it for lease, right? So debit is paying rent to his landlord, to landlord account. 20,000, 20,000 being third year royalty due. Now, what is the second entry? Second entry is for payment. Every year the entry remains same, only the amount changes. But you should be careful because recovered is there and recovered is there. How to pass entries for that we'll understand in the next year. Okay. This year we are passing for the payment entry. We are debiting the landlord account debtor to bank account. What is the amount you paid? 2020. And transfer entry. Narration you should write being third year royalty paid. Production account you are transferring royalty to production account. Production account debtor to royalty account. What is the amount in the royalty column? That only you are recording 20,000, not landlord or minimum rent. Whatever there in the royalty column, that should be transferred to the production account. Being royalty transferred. Royalty transferred. Now, for the fourth year. Fourth year, 2022. Here you can see the royalty is more than the minimum rent and you have recovered. When short working was occurred, you have debited the short working account. When you are recovering the short working, you should credit the short working account. Short working is a Nominal account. What is the rule for nominal account? Debit expenses and losses, credit income and gains. Is it not an income to the tenant? It's an income. He is recovering the amount, whatever excess he has paid. So this should be credited. Okay. Now let us pass the entry royalty account debtor. What is there in the royalty column? 30,000 that you are supposed to write. 30,000 to short working recovered. Recovered account 10,000. And how much you paid to the landlord? To landlord. Fourth year 20,000. To landlord account. Landlord account is 20,000. Now your debit is equal to credit. 30, 30, right? Being fourth year royalty due. Only practice makes you perfect. If you are thorough with the journal, then ledger will be in your fingertip. It's very easy to transfer and prepare the ledger accounts if you know journal entries. So only first understand the journal. In the upcoming videos, I'll do ledger also. Okay. Now the second entry is for the payment entry. Landlord account debtor. What is the amount you paid to landlord? 20,000. That only you are recording. To bank account 20,000. Being fourth year royalty paid. The next recover entry. Right. 2022. He recovered entry is there. Before that, we'll pass the production account. We are transferring production account debtor to royalty account. It is 30,000. Whatever there in the royalty column, that only you are recording while transferring to the production account. Okay. Keep this in mind, not this landlord. Whatever there in the royalty column. Being royalty transferred. Royalty transferred. Now, for this you have passed the entry. Whatever recovered. Now, irrecovered is there. For this also you need to pass the journal entry in the fourth year only. So that entry is whatever irrecovered is there, no? That you are transferring to which account? Profit and loss account. Profit and loss account debtor to short working account. Short working account. 4,000. Being short working transferred to profit and loss account. Profit and loss account. Now, for last year, that is fifth year, 2023, there is no short working, no recovery, no irrecovery. Only entry for the three entries you are passing. First entry for the due entry, royalty account, debtor. What is there in the royalty column? 40,000, and landlord column also 40,000. So 40,000 to landlord, to landlord account 40,000 being fifth year royalty due. Then second entry for the payment entry, landlord account debtor to bank account, landlord account debtor to bank account 40,000, 40,000 being payment made to landlord, then last entry for the transferring entry 2023 production account debtor 40,000 to royalty account 40,000 being royalty transferred, being royalty transferred. Hope you all understood. I'll just repeat once. First, you have to prepare the analytical table. In the analytical table, to get royalty, we are multiplying output with the royalty per unit or per ton, whatever it is given. Then minimum rent will be given. It is fixed for all the years. There will be no change. In some cases, changes if it is specified in the question, then only you need to make that. Then surplus, when your royalty is more than the minimum rent, it is called surplus. Short working, when minimum rent is more than the royalty, it is called as short working. Recover, whatever short working occurred, you can recover when you have surplus. You recovered whatever amount specified years, the concerned years for the recovery will be given. Within that year, specified year, you can recover. If it is not recovered, then that balance amount is called as the recovered amount. And last column is whatever amount you are paying to the landlord will be recorded. And first entry for the due entry, royalty is a nominal account, short working is also a nominal account. The rule of nominal account is debit expenses and losses, credit incomes and gains. Royalty is an expense to the Z company, so we are debited the royalty account. And we have short working, so we have debited the short working also, and whatever landlord we have paid, that we have credited. And while making the payment to the landlord, you are debiting the landlord account, because landlord is a personal account. The rule of personal account is debit the receiver, credit the giver. Landlord account we are debited. And then bank account, through bank we are making payment, bank account we credited. Bank is a real account, so what is the rule of real account? Debit what comes in, credit what goes out. It is going out, so bank account we credited. Then we are transferring the royalty to the production account. Production account is also a nominal account, so production account will be debited, and by crediting the royalty account, the royalty will be transferred to the production account. For that, whatever there in the royalty column, that will be considered. Thank you for understanding. Have a great day.